Hey guys, welcome back to the channel DTLA Forex. In today's video, I'm going to share with you the VIP strategy to trade boom and crash and be profitable using two indicators, which are the moving averages of oscillator and the relative strength index. First, I will start by putting in the relative strength index as the first indicator and set the parameters. Then next will be the moving average of oscillator. Now we're going to start this with boom 1000 index. We're going to put in the first indicator, which is the relative strength index. All right, now we're going to look for the relative strength index and put the period on 13 while we apply it to close. Then the levels, you're going to put on 80 and you're going to put on 10, right? Then the style right here, you put it on 3 pixels. Then the line right here is going to be the one on the middle that I have space. All right, then you put this line at the first one right here. Then you click on done. All right, now that's the parameters for the relative strength index. Now it's going to be the next indicator. We're going to add the moving average of oscillator on indicator window 1. All right, now look for the moving average of oscillator right here, and we're going to put on the fast EMA on 12, the slow EMA on 26, while the MACD SMA is going to be on 9. All right, then we don't add any levels right here while we're using the style on 2 pixels. All right, we're using 2 pixels for the moving average of oscillator parameters. Then we're going to click on done. Now this is the setup while we're using the third zoom level. All right, now this is the first zoom level 1, 2, right? Now this is the third zoom. All right, the third zoom level we're using for this VIP strategy, right? So we're going to be using this same strategy and the same parameters to trade the boom 1000 index and as well as the crash 1000 index, and I'm going to show you how you'll be able to be profitable on this market. So you're going to pay a close attention to what I'm about to share with you right now. So what we're seeing right here is the RSI. All right, this line right here is the RSI, while this one with space is the moving average of oscillator. All right, the moving average of oscillator. Now how do we make profit with this strategy? We're taking 10 candlesticks and 5 candlesticks. I'm going to show you a position whereby you'll be able to know that this market is 5 candles you'll be able to take, and when you see another market structure, you'll be able to know that this market is 10 candlesticks you'll be able to take, right? I'm going to show you how to be sure that you can take a successful 10 candles and you can take a successful 5 candles without, breaking your profit. All right, now this is it. Okay, now you see that this line here, this blue one, which is the RSI. All right, when the market spiked, meaning that when this market on boom, when it goes up at the bearish level, you see that it crosses almost at the top. All right, now when you see a long spike, all right, a long increase in price, you are looking at this point, you're not looking at this market right here once you want to predict your 10 candlesticks on the market. All right, now we are seeing here that this line right here, which is the RSI, you can see the long range it got after when the spike occurred. You can see that this spike line right here is big, right? And this line, which is the downtrend of the moving average of oscillator, this is where we're going to be scalping the market, taking our 10 candlesticks. So whenever you see a line right here that is long enough like this, all right, when this line here, this moving average of oscillator starts creating a downtrend, that's when you enter the market for a sell. Okay, on boom, you enter the market for a sell and you take about 10 candlesticks from this market. Remember, you're taking this candlesticks, then you take about 10 candlesticks from the market. Look at it. When this line right here, which is the RSI, once there is a big spike just like this, all right, take a look at this. At this point again, here you count your 10 candlesticks at this point. When it starts creating a downtrend on the moving average of oscillator, when it starts creating a downtrend, you take your 10 candlestick from the market. You can see at this point, when the spike on the market is huge, you take your 10 candlesticks. When it starts creating a downtrend, then you close after 10. All right, you close after 10 candlesticks on the market. All right, now if you're in this position right here, you can see that the spike is not big enough for you to take 10 candlesticks from this market. Take a look at it. There was only 3 lines here before the spike happened, only 3 candlesticks before the spike came through. All right, take a look at it. So this line right here, which is this RSI, isn't big enough. All right, isn't big enough. Remember, we're using the third zoom level, and we can see that this line here is bigger than this. All right, we can see at this point right here, you can see it starts creating a downtrend at this point. All right, it starts creating a downtrend even at this point. Even though there was a spike here, it starts creating a downtrend, there was a spike, then it continued to sell until this point. I hope you understand what I'm saying to you guys. All right, remember that there's always going to be a spike on the market, but the trade is a downtrend. It means that the market will sell even though the spike comes in. All right, remember that crash and bull market is always volatile. So even though you are seeing a downtrend, that this market is going on a downtrend, it doesn't mean that the spike won't come. Yes, the spike will come, but the market is going on a downtrend, which is a sell. All right, you know that the market buys, the market sells, the market buys, the market sells. That's boom and crash, but it follows the same market structure. Once the market is bullish, what's come to your mind? To buy, right? Once the market is bullish. Then when the market is bearish, what comes to your mind? Sell. So when you see that on the crash and boom market, for let's say for example now we're using the boom 1000 index market, all right, we're seeing that the market is bearish. What comes to your mind is sell opportunity for a bearish. So that sell opportunity, it doesn't mean that the market won't spike. The market will spike. All right, the market is going to spike and give a what? A bullish candle, but it will sell again because its market is bearish and the market is going on a bearish structure, just like I'm sharing with you right now. On the downtrend of the moving average of oscillator, once the spike comes into the market and you see that the spike is a big spike like this here. All right, take a look at it at this point at the level of 60 above. At the level of 60 above, you take a sell. When you start creating a downtrend, you start counting your candlesticks and you exit after 5. All right, you exit after 5. Take a look at it. You could place a sell immediately after the spike. At this point, you could place a sell because the next step is for it to go into a downtrend or the moving average of oscillator. All right, I'm going to show you how you can do this on the crash 1000 index. All right, on the crash 1000 index. And another thing I want to share with you guys on the boom market, like this. Now what we're seeing here is that at this point we know that this market is going to sell, right? Because there's a huge spike right here and the market starts creating a downtrend. But if we take a look at this point, we saw that there's a break in structure on this trend here. At this point, take a look at it. The market spiked a little bit and it sold. The downtrend started creating a downtrend right here and there was a spike. Now I want you to know that once you see a breaking structure like this market is going to continue this same pattern again, just like it did at this point. All right, just as it did at this point. I hope you understand what I'm sharing to you guys. Now I'm going to show you how you can do this on the crash 1000 index market and be profitable. All right, now this is the crash market right here. Once the market structure starts like this, once you're in the market right now, you're on crash market and you see that the previous trend market is giving a zigzag structure just like this, giving a structure like this, know that that market is going to continue that same pattern for a short period of time, right? It's going to continue that same pattern for a short period of time. Now take a look at it. If you're on the bull market using the same strategy, the moving average of oscillator, right? This is the spike that comes into the market. When it starts reaching an uptrend, you place a buy. You take your 10 candlesticks. Remember, you take 5 after 5. You take 5 candlesticks before you place another buy for another 5 candlesticks, right? On the boom 1000 index is on the downtrend, while on the crash 1000 index is in the uptrend of the moving average of oscillator. So I hope you understand what I'm sharing to you guys. All right, you see right here, you place a buy, you take your 10 candlesticks at that point. Even in a position like this, you can take 5 candlesticks successfully. I'm going to show you. Now we saw here, this is the first market, this is the first spike, and we're seeing that this market is a sell market. Take a look at it. This market is at the overbought region, meaning that this market is going to sell to the oversold before it's going to buy again. All right, so you don't have to just depend on the indicator strategy. That's why you need to know that this market is going to sell using price action as well. All right, you can't just depend on these particular indicators without looking at the main market chart. You need to know that this point here, the market is going to sell because price is at the overbought. So if you see that the market spiked right here at this point up to this down point, right, and you place a buy, know that the market is still going to sell again, because this, you can see that there is a very big buy at this point. The market bought up at this point and it spiked, right? So it recovered back the profit which it has lost from the market from the previous buy, right? Take it from this point here to this point. All right, so know that the market is going to crash again before it will buy. All right, now remember here it sold down here to this point, it sold again after 4 candlesticks at this point here. Then we're taking, when it starts creating an uptrend, that's when we're placing our buy, not after the spike immediately. When it starts creating an uptrend, that's when we're placing our buy, taking 10 candlesticks or 5. All right, you can take 5, you can take 10, but when you want to take 10 candlesticks, you take 5 after 5. What I mean by 5 after 5 is that you take 5 candlesticks first, then you look at the market position before placing another buy to take another 5 candlesticks to be successful on the market. So I hope you understand what I've just shared to you guys. So if you found value in this video that I just shared with you, do where to like and subscribe to this channel, the Daily Forex, for more awesome trading tips and strategy. I'll see you guys on the next video.